A tiny insurance company just did something Wall Street couldn't. They put a price tag on Tesla's full self-driving. And that price says FSD is at least 50% more safer than you driving. Let me explain why this changes everything. Look, if you're short on time and you don't want to listen to some random guy on the internet with a cat obsession, here's the takeaway. Lemonade is offering a 50% per mile discount when Tesla's FSD is engaged. Insurance is literally a market price for risk. A real company, with real actuaries, just publicly declared they believe autonomous driving is dramatically safer than human driving. That's not hype, that's money talking. And this is not exaggeration. This new hints a huge shift in the entire auto insurance market. Alright, if you're still here, let's break down why this matters for both Tesla and Lemonade investors. And honestly, for anyone watching the autonomous vehicle space. But quick intro if you're new here. Hey, I'm DataCat. Former corporate slave, spent years as an analyst inside a Fortune 50 company staring at spreadsheets until my eyes went dry. You know that feeling when you're in your 5th meeting of the day and someone says, "Let's circle back for the 12th time"? I traded that life for, well, lasers and keyboards, and occasionally being yelled at by my cat. I've been running this channel for about 6 months now. Still figuring things out? Every like and subscribe matters, honestly. I'm not going to pretend I've got millions of subscribers or some secret trading algorithm. I'm just a guy who likes digging into data and, sharing what I find. Think of me as that friend who actually reads the footnotes in earnings reports, except I'm a cat person, so I'm naturally suspicious of everything and mildly judgmental. Like, I see a stock gap up 9%, and my first instinct is, okay, what's the catch? Anyway, let's get into this Lemonade and Tesla news because I genuinely think the market is missing the bigger picture here. So here's what went down. Lemonade just announced something called Lemonade Autonomous Car Insurance. It's designed specifically for self-driving cars, starting with Tesla's full self-driving system. And here's the headline number. They're cutting per-mile rates by approximately 50% when FSD is engaged. Now you might be thinking, okay, DataCat, companies do promotional discounts all the time, what's the big deal? Or maybe if you are one of those Tesla supporters or tech enthusiasts shouting, what's so special about it? We've been telling the non-believers for years. Old news is so exciting. Here's the thing. Insurance isn't marketing. Insurance is math, cold hard actuarial math. When an insurance company prices a product, they're essentially saying, this is what we believe the risk costs. They're not guessing. They're betting their balance sheet on it. So when Lemonade says we'll charge you half as much per mile when FSD is driving, they're making a statement. We believe, based on data, that FSD engaged miles are significantly safer than human-driven miles. That's fundamentally huge. Let me put this in perspective. You know how everyone argues about whether FSD is actually safe? X-fights, Reddit threads, people sharing anecdotes, it's a mess. Everyone's got an opinion. But insurance companies, they don't care about opinions. They care about claims. They care about dollars out the door. If FSD was secretly dangerous, offering a 50% discount would be financial suicide. Let me give you some numbers to ground this. I don't have the official 2025 number yet, but the average cost per private passenger auto claim in 2024 was around $13,000. That's up over 10% year over year. Bodily injury claims? Those average about $29,000 per injured party. We're not talking about fender benders here. And total loss frequency, meaning crashes where the car is completely written off, hit 22.6% through April 2025. Almost a quarter of all claims are total losses now. So you have to understand that the auto insurance industry is operating on a very thin margin. They are dealing with expensive claims and rising costs. The combined ratio for auto insurance, that's the measure of profitability, hovers in the mid-90s when things are good. Anything over 100 means insurers are losing money. And we were only getting low 90s for once because it was during COVID lockdown. Against that backdrop, Lemonade is saying, yeah, we'll cut prices in half for FSD miles. They're not doing this for fun. If they are not planning to bankrupt the company within a year, then it simply means they believe the loss costs on those miles are dramatically lower. Okay, so here's where my inner analyst cat gets excited. And yes, cats can be excited. We just hide it behind a facade of indifference. The traditional way people think about FSD is, cool feature, costs money, maybe it works, maybe it doesn't. It's been stuck in this weird limbo where enthusiasts love it and skeptics dismiss it. But insurance changes the equation. Here's the mechanism. If you can save real money on insurance by using FSD, Suddenly, FSD isn't just a tech toy, it's a financially rational purchase, especially for high-mileage drivers. Think about it. Let's say you drive a lot. You're paying, I don't know, $2,000 a year in insurance. If half your miles are FSD engaged and you're getting 50% off those miles, that's real savings. Maybe a few $100s a year. That offsets part of your FSD subscription cost. And then there's the behavioral nudge. Lemonade is basically saying, use FSD more, pay less. That's powerful. It incentivizes engagement with the system, which means more miles driven in FSD mode, which means more data for Tesla to improve the system. You can see where this goes, right? It's a potential flywheel. Lower insurance costs when using FSD leads to higher FSD adoption and engagement, leads to more supervised FSD miles and data, leads to potentially a safer system, which leads to even lower loss costs, which leads to even lower premiums. Lemonade explicitly said prices could drop further as Tesla ships FSD updates. They're committing to this flywheel publicly. Now, let's talk about what Lemonade is actually doing differently here, because this isn't just Tesla insurance. Traditional auto insurance prices based on the driver, the vehicle, and geography. Age, driving record, zip code, car model. That's pretty much it. Lemonade is saying they can price based on whether FSD was engaged during driving, which FSD software version is running, the sensor precision, and real-time telemetry from the vehicle's onboard computer. They partnered with Tesla to get access to this data. That's a different game entirely. If this works and scales, Lemonade has a structural advantage. They're not competing on brand or distribution. They're competing on data access and modeling sophistication. That's a moat. A nerdy actuarial moat, but a moat nonetheless. And here's the distribution angle. Tesla owners tend to be attractive customers. Higher lifetime value, more likely to bundle policies. Home, renters, pet insurance, and comfortable with app-based purchasing. Lemonade offers all those lines and explicitly mentions bundling discounts. So this Tesla product could be a wedge into a valuable customer segment that then cross-sells into Lemonade's broader business. Not a bad strategy for a relatively small insurer trying to differentiate. Alright, I've been pretty positive so far, but you know me. Suspicious cat, remember? Let's talk about what could go wrong. Risk number 1. Actuarial reality. Insurance pricing is complicated, like really complicated. It's easy to mess up the math based on a projection model, and if the actual loss experience doesn't match Lemonade's projections, they'll have to reprice, cap the discount, tighten underwriting, or eat losses. None of those are great outcomes. The specific concern here is severity versus frequency. Even if FSD reduces crash frequency, Teslas are expensive to repair. They're loaded with sensors, cameras, complex parts. When a Tesla does crash, the repair bill can be brutal. So Lemonade is betting that the frequency reduction outweighs the severity increase. That bet has to hold. Risk number 2, platform dependency. Lemonade's entire edge here relies on Tesla data access. What if Tesla changes the terms? What if they decide to favor their own insurance product more aggressively? What if the data access gets restricted? That's a real concentration risk. Lemonade is building a moat on someone else's land, essentially. Risk number 3, rollout execution. They're starting in Arizona on January 26th and Oregon about a month later. That's 2 states. Scaling nationally in insurance is non-trivial. Every state has different regulations, different requirements. This could take years to reach full national coverage. So yeah, there's real execution risk here. Okay, but let's look at what the market actually did when this news dropped. Because price action tells a story and it doesn't care whether a cat agrees. Lemonade closed at $85.36, up 9.1% on the day. That's a meaningful move. The candle structure was a typical gap and go. Stock gapped up at the open, around $79.55, and never looked back. The candle has basically no lower wick, meaning the open was the low. Buyers were aggressive from the opening bell, straight through to close. Volume was 1.39 times the 20-day average. That's healthy, and enough to confirm institutional interest, without being so extreme that it screams exhaustion. The stock is trading above all key moving averages. It's about 7% above the 20-day EMA, which is sustainable for a momentum stock. Not dangerously overextended yet. RSI is at 60. That's the sweet spot. Rising momentum, but not overbought. There's room to run before technicals get overheated. MFI is at 75 though, approaching overbought territory. Key levels to watch. Resistance is at 85.76, which was the intraday high, and then 88.88, which is the 52-week high. Support is around that 79.50 gap level. The stock is only about 4% away from its 52-week high. If it breaks through, there's not much historical resistance above, at least not for the past few years. 2 scenarios I'm watching. Aggressive entry. If it pushes above 85.76 or the 52-week high, momentum traders might chase it toward 90 or 95. Conservative entry. Wait for a pullback to around $80 near the gap support and the rising 20-day moving average. For what it's worth, I lean toward waiting for pullbacks. But I'm a cautious cat. I've been burned before. We all have. So, here's my take on what makes this actually interesting beyond the headline. The important product isn't cheaper Tesla insurance. The important product is rating autonomy as a software feature with measurable risk deltas. If autonomy becomes insurable at materially lower cost, it changes how we think about ADAS and self-driving as a consumer product. It's not just technology anymore, it's a financial instrument, and it pushes the entire insurance industry toward embedded underwriting tied to OEM telemetry. Whoever gets early access to that data and figures out how to price it has a structural advantage. Lemonade is trying to be early in that shift. Whether they succeed or not, they're pointing toward where this industry is going. For Tesla, the upside isn't really about insurance profits. It's about making FSD a financially rational choice for more consumers. It's about an external credibility boost from a third party putting real money behind the claim that FSD is safer. That narrative shift could matter more than the actual insurance revenue. Alright, that's the breakdown. A small insurance company just did what years of internet arguments couldn't. They put a market price on Tesla's FSD safety claims. And that price says the system is meaningfully safer than human driving. Is it right? We'll see. The data will tell us eventually. But the fact that a real company is betting their balance sheet on it, that's not nothing. If you found this useful, a like helps more than you'd think. The algorithm is a mysterious creature. Kind of like a cat actually, except less cute and more frustrating. And if you want more of this kind of analysis, consider subscribing. I'm just a guy digging through data and sharing what I find. No courses to sell, no secret Discord, just this. Thanks for watching. DataCat out, and I'll catch you in the next one.